Before we begin, please support the channel by subscribing, liking, and sharing this video. Constructive discussion is always welcome, and we invite you to share your views and insights in the comments. U.S. stocks, NVIDIA and MSFT semiconductor divergence, Goog, Meta, TSLA updates, and software IGD capital flows with CTA selling triggers. This video presents a direct informational narration of the source document. All right, let's look at what's on the agenda for today. We'll be moving chronologically through the latest market data, starting with geopolitical macro indicators and market breadth. From there, we'll dive right into specific mega-cap technical valuations and software sector capital flows. And finally, we'll wrap things up by looking at systemic risks, including those crucial CTA triggers and IPO liquidity dynamics.
Okay, let's jump right into Section 1, Geopolitics and Macro Data. We're going to break down the latest global developments and U.S. economic data that are directly impacting energy and input costs.
So oil prices have been incredibly volatile lately. Here's exactly what went down. Iran halted information exchange via mediators and openly threatened to block both the Bab el-Mandeb and Hormuz Straits. As you'd expect, that news sent Brent crude soaring right up near the $98 mark. But then it pulled back, eventually closing near $95 right after Trump announced a Hezbollah-Israel ceasefire.
Moving over to the domestic front, the May U.S. ISM manufacturing PMI actually rose from 52.7 to 54.0. That easily beat the 53.0 consensus. Digging a little deeper into the data, the new orders index climbed to 56.8 and the production index increased to 54.3.
What's driving this? Well, survey respondents explicitly cited escalations in the Middle East, especially regarding Iran, as the primary driver behind spiking energy, fuel, and input costs. On top of that, multiple companies are still reporting ongoing supply chain disruptions, delayed shipments, and actual raw material shortages. It's definitely a tricky environment out there.
That brings us to Section 2, Market Breadth. We're going to peek under the hood of the S&P 500 index, and let me tell you, there is a massive divergence happening beneath the surface right now. Get this, even though the S&P 500 is trading near historic highs, right around that 7,600 level, the actual market breadth is highly concentrated. As of last week, only 21 stocks hit all-time highs. Think about that. That represents just 4% of the entire index.
And the picture gets even more extreme when you look at the downside. 22 stocks are currently down over 20% from their historical highs, and a whopping 109 stocks are down over 40%. When you add it all up, 60% of S&P 500 constituents are sitting in a drawdown of at least 20%. The broader index is basically being propped up almost entirely by semiconductor and AI-related equities.
Let's move to Section 3, Mega-Cap Technicals. Here, we'll break down the specific technical levels and forward valuations for the major tech players. Looking at the NASDAQ, it rose 0.6%, with 55 advancing and 46 declining issues. The real catalyst here? That massive weekend announcement from Microsoft and NVIDIA about their joint Windows AI superchip. That news gave a huge boost to ecosystem partners like Dell and HP, while simultaneously putting serious pressure on competitors like Qualcomm, Intel, and AMD.
So let's map out the key levels. For Microsoft, support is sitting right at 440 to 450. We're looking at resistance between 464 and 490, with upside targets sitting at 498 to 516. As for NVIDIA, its January 2027 valuation estimate remains between 16 and 22, with resistance at 226 to 230 and a target of 236. The current price is 24, with upper bounds spanning from 244 up to 326, lower bounds from 327 to 436, and support way down at 208 to 218.
Now, checking in on AMD, its actionable support is between 442 and 453, with today's lowest point hitting 486. It carries a 2027 upper limit of 439 and a 2028 target near 500, which is based on a current price of 51. Meanwhile, Meta is still trapped in a wide range from 59 to 611. It's facing strong resistance at 638 and 660, but it does maintain a long-term actionable range of 500 to 700.
What about Amazon? Well, Amazon is currently resting at medium support between 260 and 275. If you're looking for aggressive long-term entries, you'd really need to pull back below 256, which brings it into the 2026 valuation window of 181 to 242, or closer to that 2027 median of 257. Then there's Tesla, which closed at 415, breaking 419 and effectively closing its upside window. The trendline support at 404 to 405 lines up perfectly with the 100-day moving average. But beware, a break below that level triggers a downside target below 368.
Okay, this is huge. Alphabet is raising a massive $80 billion in cash specifically for AI capital expenditures, and this includes a $10 billion private placement going straight to Berkshire Hathaway. These shares are priced between $348.20 and $351.81. That pricing is key because it aligns perfectly with the 2027 forward median valuation of $319, giving us a really important watch zone at $340 to $350. Also note that a short-term breakdown was officially triggered when it fell below $375.
Wrapping up the megacaps with Apple. Its immediate technical support is found between $291 and $302. But if that gives way, there's a much stronger structural support level sitting lower, between $265 and $281.
Next up is Section 4, the software sector. We need to examine the rapid, capital-driven momentum we're seeing play out in the IGV ETF right now.
Now, you've got to understand the difference here. The semiconductor rally was built on actual fundamentals, like earnings increasing by 1.5 times. But the software sector's recent surge, nearly 6% in a single day, is heavily overbought. It's not driven by uniform fundamental strength across the board. Instead, it is predominantly being fueled by short-term capital flowing straight into cybersecurity stocks. So here's the playbook for the IGV ETF. It successfully broke the 107 level, and now it's staring down a final resistance block between 109 and 111. If it breaks above that, it opens the door for even more upside. But honestly, chasing prices right here is highly risky. Why? Because a drop below 101 would completely kill this current upside momentum. Finally, we reach Section 5, Systemic Risks and CTA Triggers. Let's zoom out and look at the broader market risks, particularly focusing on algorithmic selling thresholds and some really interesting IPO liquidity dynamics. Here is the magic number to watch, 7232. The Commodity Trading Advisor, or CTA, selling trigger for the S&P 500 has moved right up to that 7232 level. What does that mean for you? Well, if the market drops roughly 4.5% to 4.9% down to that specific mark, it is going to trigger a wave of accelerated algorithmic selling. Last but certainly not least, let's talk about the upcoming SpaceX IPO. They are targeting a massive $1.8 to $2 trillion valuation, looking to raise $45 to $75 billion. Now, broadly speaking, that's a pretty low impact to overall market liquidity when you compare it to daily megacap volume. To put that in perspective, NVIDIA alone sees $47 billion and Microsoft sees $24.5 billion in volume every single day. However, it does pose a very specific risk to highly speculative stocks that have seen massive recent gains. Traders might just decide to liquidate those specific profits so they can jump in and participate in the SpaceX IPO. Definitely something to keep on your radar.